financial argument. Follow us on YouTube.
About 24 hours after the Fed released their latest FOMC statement, and they hiked rates for the fourth time in the last 18 months here. And after a little bit of an initial burst for gold and silver, the metals have been hit hard on Wednesday afternoon and even harder here on Thursday. Silver traded down, I think about to $16.60, down about 50 cents on the day. Gold's been down about $25. Both have recovered a little bit here in the afternoon markets. Silver trading about $16.80 and gold about $12.55 right now. Let's start with your guys' take on the latest rate hike and whether after this initial knee-jerk reaction down here is over, are we going to see a fourth sustained rally for gold and silver prices after a rate hike?
I'll start. Generally, believe it or not, when you see rate hikes, gold and silver actually rise. Every day, you go look at the data from the previous years, gold and silver actually does quite well. As far as this latest rate hike, I'm pretty sure it was a policy error. She's forced into, just because she says she's going to, but look, they're not getting any wage inflation, which is what they really want. And it's certainly raising rates is going to cause problems everywhere else around the globe, including China. If you look at China's data, they're in a mess. They're not growing at all. And of course, they're the engine for the world in producing, all your socks and underwear and just about everything, the little products that they make. They're slowing down dramatically. You can see that Nike today is getting rid of 2% of their workforce around the globe. So I'm seeing global growth basically non-existent. So in order for her to raise rates, it makes no sense because this will probably a one only. A lot of the smart people, and you can actually see it in the long bond. The long bond is rising in price instead of going the other way. So they kind of sense that this is a policy error on her, and eventually they'll all be born right. The bond traders are pretty good. They're smart. They realize it's a terrible error. Anyway, that's my take on that one. You guys can talk your opinion.
Point about the long bond is a good point because there's been a disagreement between bond investors, generally speaking, and the stock market. The stock market's been going cuckoo to the upside, high valuations, and driven by brain-dead index fund purchasing and, keeping up with the Joneses kind of attitude among money managers where they're on autopilot and chasing FANG stocks, and that blew up about a week ago. We have the longer rates in the United States going down because people are assuming that the economy is turning down, and that's what the data is showing. So we're going to have this kind of mismatch with the equity markets continuing to drift downward despite, their occasional bursts higher when the happy talk about economic numbers that are manufactured come out, most specifically, the tiny, tiny amount of wage inflation that they occasionally can put on as a show. But, the last employment reports stank.
By the way, generally, one guy's right. Either the equity players are right or the bond players are right. And I'll put
one market traditionally is the one that's right.
Right. It's obviously. So, that should be a non-starter. Also, the P over E is extremely high. What is that, I think 27 or something? It's very extremely high, which is at record levels ever. There's going to be a problem. You're going to see a big market correction, and then there'll be a movement into metals, similar to what you're seeing, a movement into the cryptocurrencies. Of course, the government don't know how to control that yet. And what you're seeing into the cryptocurrencies is what you'll see eventually into gold and silver.
Do you think it'll be before the debt showdown, or do you think that's what's going to trigger it, Harvey?
It'll certainly, the debt ceiling will trigger for sure, but I think it's going to be before that. But see, the debt ceiling is they have about 6 months of money. When Mnuchin stated that they reached their debt ceiling at 20 trillion in March, they have this pension money and all these the VA money and things like that. It's about 660 billion. So if you take March to 6 months, you're dealing in the first 2 weeks of September. And there's no way the Republicans, the Tea Party, are going to agree to Trump's big, huge tax cuts and huge expenditures. It's just not going to happen. So nothing's going to happen. All of a sudden, they're going to realize, wait a minute, the U.S. can default, and you'll probably have the same crisis that occurred about 2 years ago, when the markets tanked and everything else. So that's certainly, that's probably the latest. So in answer to your question, September would be the latest. I think that there's real problems I'm seeing a lot of scarcity in silver on the markets, which is interesting, and I'm seeing a lot of problems with silver at the COMEX. Not necessarily gold, although gold is a little backward in London, not backward in New York. Silver, in my take, is backward in both places, in London, and so and you guys are experts in the silver market. This is going to be good for your clients. They're going to be starting to clamor for some silver product pretty rapidly. If you guys want, I can talk about what I've been noticing lately in the issuance. What actually happened is that there's an obscure contract at the COMEX. If a long has a contract and somehow in emergency they can't deliver, the CFTC allows a product called an EFP, or exchange for product. And these are issued to a long, and it's a private deal between the long and the bank. And the deal gives them a future contract, wherever that is, and some fiat or money, paper money. We have found out that the dominant deliveries are not from the COMEX, but these future papers are forwards from London. So in other words, the long are given these future contracts, and then of course they take delivery. And that certainly explained why I was having so much difficulty in understanding of how the gold open interest obliterated as we entered into first day notice. I couldn't believe it, because the spread between the 2 months forward, the front month and the next active month was tiny, and yet everybody left. That didn't make sense. Why? And then James Turk and also Cruz Johnson, both of them basically found out the use of these EFPs. Oh, so that would certainly explain. And to this day, even today, EFPs are given on gold contract like there's no tomorrow. But what's fascinating, in the last 3 months, EFP paper has not been issued or asked for. So in other words, a long who's got a silver contract says, I'm not taking a forward. I want my real metal today, which is interesting. Of course, that's your definition of backwardation. Of course, they certainly they don't want to fool around in paper. They want the real stuff. And that is why I guess we're seeing scarcity in silver. It's been manifested in both London and at the COMEX. So that's what I'm seeing, and I'm certainly trying to work with the CFTC officials, and we're having a huge disagreement. I'm very angry at this, because I asked them. I said, if you think it's so good, go write a paper on this and why you think it's okay. All right, and of course they don't. And I'm telling them it's wrong because they're using a different form for delivery. They're using the London as the form for delivery as opposed to the COMEX, and of course that kind of distorts just about every figure you want. So the open interest it's hard to gauge what's going on, because you really don't know what's being delivered upon. Because some of it can be delivered in COMEX and some can be delivered in London. Okay, so anyway, that's my take, guys. But I think it's yeah. Go ahead.
How confident? Excuse me. I mean, the CME Group declares that all of these transactions exchanged for physical are supposed to be declared and reported upon. How confident are you that they are in fact not disappearing in the OTC market, never to be seen?
I think the deliveries are. If I have a contract that originated from the comics. And I was given a future forward in London and take delivery. Of course, how do they know? It's gone from them. They don't know what.
Yeah, the execution of the forward future at some later month when
Yes.
it comes due or when it's chosen to be delivered upon. I guess that's interesting. But my question is the degree to which these exchange for physical transactions are actually being reported honestly in the first place. I'm wondering if they're in fact partially dark themselves and that.
Okay. What Matthew Hunter has been telling me is that they are monitoring these things. So that's part of their gauge of audit. So they can actually see through this. But once it leaves the comics and a delivery is in a form, I guess they lose that. Which is, I guess, what you thought about the GLD. Once they settle on a GLD contract, of course, they have the idea is that they would get barcodes and everything else, some sort of physical delivery to consummate their deal. So they got to have some semblance of that there is physical being settled upon. It just wouldn't make sense. It wouldn't. I mean, it would if it was just paper all the way. It would the comics would just blow up. So there has to be some sort of real physical somewhere. And I think the audit situation of the EFPs, they certainly are watching these things. But when it's settled upon, I guess they just don't, they would have no idea. A forward, by the way, is not necessarily a future month. It could be in 10 days, 15 days. Forwards are done by days. So it's not like what we have over here at the comics, by monthly.
Mm-hmm.
Okay, so anyway, I'm working on this one, but it's certainly causing concern for James Turk and Andrew. Andrew just noted that he says EFPs are unbelievable in gold, huge amounts. And that certainly would make sense to me because you're dealing with months and months of these EFPs being turned over into metal, and all of a sudden that's why I guess they've been bombarded with deliveries over there.
Andrew made a rather cryptic comment to Eric King over at King World News about 26 days from now, the market's going to see some fireworks. Do you believe that he's talking about the interface between exchange for physical transactions and gold?
That is exactly correct.
Yeah.
Yeah. Andrew is going to talk about this issue. By the way, it's July 8th. So I think it's July 8th. So, that's the day this is supposedly, I guess, where all these contracts have been written, and maybe one sovereign has been taking all these and is going to settle on. That would be exciting. Okay, we don't know yet, but it's interesting. I don't know. Andrew's a trader. He's an LBMA trader. If there's anybody that knows, it's him. He knows. I mean, I'll put my money on him anytime. He knows.
Well, we're certainly shaping up for an interesting summer. I mean, the political fracas in the United States and the partisanship will make that debt negotiation almost impossible to be anything productive, which means, political confidence within the United States is going to take a punch in the face.
That's what.
At the exact wrong time when it comes to our stock market being as highly valued as it is and our economy rolling over. I don't see how we get out of this without seeing a significant equity correction, and that in turn will be great for assets like gold and silver.
Right. Which is why they're trying to keep the lid on silver and gold now. The other thing Andrew said was that in gold, sovereigns were basically taking anything below 1260. Okay, so he was thinking anywhere between 1255, 1250, and 1260. The sovereigns were in. and my guess of the sovereigns would be China and Russia. Okay, I think they've had enough.
Well, they're seeing that today, so.
Yeah, exactly. They're on vacation today. The operation of painting the tape yesterday after the FOMC nonsense is, for the time being at least, even broken the perception among paper-chasing traders on the COMEX. They were diving after we'd hit the 1260 mark too.
Well, let's see what happens. It's not going to go much lower. Gold,
Yeah.
I think, and certainly silver. Silver at 1650 is your bottom probably. It's not going to go any lower, and just might as well pick it up because it's so cheap. It's nice of them for offering it real cheap.
As long as you're buying, it certainly is nice.
Buy it and just store it, stack it up. I mean, don't pay attention. I mean, anybody who plays the comics are out of your minds. I mean, if you you're not, just go and buy silver and put it away, and buy your gold and just put it. Don't play the leverage because they know your stop losses and everything else, and they whack you. And they're spoofing. Oh, they spoofed Andrew. Caught them in spoofing 3 days ago, or 2 days ago, or when did the big raid? Or yesterday. Caught them spoofing and went right to the CFTC and showed them within milliseconds how they're doing it and everything. The CFTC just won't let them go. Said, they wouldn't listen to them. Why? Because it's the government. The U.S. government has allowed the bullion banks to do this, so they're letting it go. Bunch of crooks.
And just after the DB, the Deutsche Bank revelations too.
Oh, you guys see those tapes. Oh my goodness. Oh man, it's the biggest breach of trust I can. How they're going to bulldoze your clients. Oh, you would. They got something like, what is it, 360,000 pages of this stuff. Oh man. And I don't know if you've heard, but they delayed the case. I don't know if you know, guys, why they delayed the case is because the government, U.S. government, wants to get involved, so they asked for a year delay. So the judge, not knowing how to handle it, said, "Okay, I'll rule on it," and now it's 8 months now, and she hasn't ruled. So at the end of the 12 months, she says, "Okay, now we'll continue on." But then while this happened, another trader from Singapore was convicted. And he starts telling about the number one trader called the Legend, and I think everybody's after him. He's the kingpin, whoever that is. He's probably from JP Morgan or somebody. He's known as the Legend, and so they're going up the ladder. So they're giving him a deal, and then they'll get other traders, and they'll finally get them. But I don't know how. It's too slow as far as I'm concerned.
Well, as it seems, they're targeting particular forms of manipulation that are the least egregious of all forms that we witness. I mean, spoof orders, big friggin' deal. I mean, that represents what, maybe 5% of the net impact on
3%.
It's a limited hangout, as they say in the intelligence parlance, or in political circles.
They know. Trust me, they know what they've done. These chat rooms.
Exactly.
They know. Believe me, they know.
And it's always hung on the evidentiary standard is tough, and you have to get somebody to come out like that guy in Singapore to fess up to doing malfeasance, and the malfeasance that they're letting hang out to dry is the least obnoxious form of what, in fact, is manipulating the silver market and the gold market.
Okay,
spoofing is trivial compared to what the other tools that these bastards use.
Listen to me, okay? Just because they got him on spoofing, it doesn't mean when you cross-examine, they're going for the marbles or other stuff.
I'm not so confident. We've been in this, for now 2 years, and the powers that be want to get this under the rug. And that's what they're trying to do. That's why we are looking at a case where somebody's being outed for spoofing as opposed to dumping, hundreds of metric tons of gold on the marketplace.
Well, it's obvious. I mean, I tell them the crime scene. I immediately send down was it 40 tons of gold last, raid. I said, it's at this time second,
Right.
They know what they've done. Believe me. The problem is for the crooks is that physical's running out. That's their problem.
Mm-hmm.
You can keep as long as they keep using paper to do a thing, they can go on for years. But the trouble is this physical's disappearing. So all of a sudden they got to face the music, and I think they're going to face the music pretty fast. I'm seeing the silver. I don't think it's going to continue. That's my opinion. So I think that's Andrews as well, and James Turk. All of us saying the same thing.
It's about time they face the music. We've been waiting a while.
Well, I'm having fun with these lawyers. I mean, honestly, it's, I can't believe some of the things have been said. I mean, it's really bad. You got to see them. I mean, when your own a bank who takes orders for me, and the bank says he's going to bulldoze me, that's the biggest breach of trust I've ever seen. I mean, that's criminal to the highest degree. The breach of trust. It's ruined everything with these guys. What they've done wrong, and they don't care, and they keep going. That's their nature. As far as I'm in the U.S., it's like a RICO case. I mean, these guys are criminals from day one to the end.
Well, I mean, did anything really ever happen to Goldman Sachs? What's that been, 6 or 7, 8 years ago with all those Call 11 hearings of all the mortgage-backed securities? Yeah. I mean, they package, slice, and dice all the loans, and then they sell them to an investment fund. Or
There's an industry-wide settlement. I mean, the whole damn banking industry was allowed to wash their hands by doing settlements.
Yeah, nobody went to jail.
Exactly.
I'm not too sure that as far as the problem with gold is when they find out that the U.S. gold is gone, and that becomes treasonable. When the United States citizen finds out, wait a minute, you mean it's not there at Fort Knox? You're guarding, you have guards, and you're guarding an empty vault.
Yeah, that or just having 10 claims on every single ounce, which is the majority actually of what's going on. So I mean that kind of scenario, to be perfectly blunt, gets resolved by wars when you have the counterparty entitled to something doesn't get their gold, and there are 10 other countries that have been or individual institutions or whatever, by the multi-hypothecation of these ounces that have been sold into the marketplace, where the regulators look the other way because half the time they don't even know what the hell's going on, and then the other time they assume, well, yeah, it's just a lease arrangement, and then the party that receives the paper is going to be selling that paper back, or to be able to be bought back. So in other words, the gold doesn't have to move, but that's a fiction. When you have 10 people or 10 institutions or governments with a claim on the same ounce, that's a recipe for disaster, and that's what's going on with the Fort Knox depository as well as the New York Fed. Above and beyond the physical that has been removed, more likely, certainly New York Fed physical has been the vaulting system within the New York Fed has been what has been tapped to execute physical dumps into the marketplace when that's been needed too.
Yeah, they do it through what we call site swaps. So it's done through the BIS, and they've been very active in the last few months in this stuff. So when who wrote this? I think it was James. James wrote, when he starts seeing that, he knows we're near the end. He starts seeing real activity in these site swaps. They're trying desperately to keep the lid on the price, but it's what happens is when China just says. And by the way, China sovereign is not taking delivery. The China that's gold going in there is for its citizens. And McLeod basically said that China really got its 20,000 tons of gold from 1985 to, let's say, 2002. They were finished by then. They were accumulating already when nobody was having noticed. And now China really wants its citizens now to have gold, and they've been very active in allowing that. And that's probably where, and we're certainly seeing probably 1,700 tons of gold net enter into Shanghai, the Shanghai Gold Exchange each year.
Yeah. Okay. I mean, the Chinese government is accumulating gold still. But Alistair McLeod's point about upwards of 20,000 metric tons being as big as what China may have been able to hoard since the mid-'80s is true, too. I mean, no one knows the exact number.
Nobody knows, but
But, his number actually, I've looked through his research. We talked to him as well, too, and the reasoning he employs to come to that number is actually very sound.
Yeah,
people like Jim Rickards are purposefully being very conservative when they say 4,000 or 5,000 tons of gold is probably what China owns right now. That's nonsense. China owns a hell of a lot more. And then on top of that, the citizens own a bunch.
I'm in that. But by the way, so when you're seeing China mines about 470 tons a year. Okay, of which probably half of it is mined at a loss, but they don't care.
Yeah, and even that gold all by itself in the last 10 some odd years exceeds their declared holdings. And we know that gold doesn't leave. So even the domestic mine supply and that gold is all sold directly to the government, and it doesn't go through, to retail channels and so forth. That all by itself represents more gold than what China has been declaring. And by the way, too, I think it was immediately after the inclusion into the SDR basket that China was able to secure, and they had that motivation to be more transparent leading up to that decision by the IMF. All of a sudden, they've stopped declaring, the monthly position additions, and what's up with that?
They didn't. They haven't announced 1 ounce after that, and I'm telling you, they are.
Who here in our audience believes the government of China has not purchased and stored a single ounce of gold in the last couple of months? Please raise your hand.
Certainly the 470 tons of gold that's coming from the mining, certainly that would add to their reserves. And then the rest of the gold that's coming through Singapore and through Switzerland. Okay. These guys, the refiners are going crazy. They're going 24/7. They're manufacturing these kilobars. Okay, and they're going 24/7. They're not stopping. Of course, that's what China wants. They're 9999, 49 bars. So anyway, that's certainly not stopping. So certainly, and the other thing to look for also for you guys for silver is the amount of silver standing at the COMEX is increasing as the month. When I go on first day notice, we're talking June. The amount that was standing was about 2.1 million ounces, and of course June is a non-active month, so you don't see too much. However, every single day from the first day till today, the amount has increased, and it's now 4.5 million. So, think about this. I mean, when you stand you always stand at the beginning of the month, and that's it. It's 100%. Okay. It used to be for the first 2 days, you deliver upon it, and the game's over, and that's it. And you go away, for the next one. Now we're waiting. All of a sudden, instead of it's increasing. How can it increase? Because certain people want it. Certain people. So the demand for silver is very high, and that's why the amount of. So it makes no sense to see that the silver price goes down. The other thing you're seeing at the SLV, if silver was at almost 17 or 18, it was $18, wasn't it, a month ago? And all of a sudden it's now $16.50. Well, what's fascinating was the SLV is staying the same. Well, how could that possibly be? That's supposed to represent demand. So so there's certainly something wrong with the amount of silver inside the SLV. I just think it's just paper. I don't think there's anything in there. Same as gold. Anyway, the demand for silver is strong, and you're certainly seeing it in London. I'm certainly seeing it in the COMEX, and I'm seeing it in scarcity. Okay, bars are becoming very difficult to get. So generally speaking, that's the thing that investors should watch for, not the paper garbage that these crooks start throwing at us. So that's my take, guys.
Yeah, the retail market from the coin perspective has been pretty horrifying. I mean, we have not seen very strong North American demand for silver and gold coins, and Doc and I have talked about that quite a bit. But when you look under the surface, there's segments in the smart money institutional sect that are definitely accumulating. They're even going after mining shares. I mean, a couple of days ago, Wheaton Precious Metals had a tender offer from private equity where they were looking to take 5% of the company, not 5%. They offered a tender of 5% below the prevailing price, trying to scoop up exposure to precious metals. This is the way institutional investors are trying to sneak in and get, rather than go and try to accumulate a whole bunch of physical and vault it privately or whatever. These particular players are going after exposure in the form of Wheaton Precious Metals because it's a streaming company.
That's
we see these kind of actions too. Hearing, Jason over at Wall Street for Main Street and Dave Kranzler, Investment Research Dynamics, others, people that talk a lot about what's going on in the mining sector. There's definitely a lot of activity of the smart money trying to get in to position quietly in precious metals, regardless of what people in the media in particular focus on when it comes to the retail market and the North American coin market and U.S. mint numbers and things like that. I mean, that's not showing what's really going on.
That's 100% correct. That's not it's the users. When the silver users are starting to get worried. You see, the problem is that they use such a minute amount of silver in all their things, and you can't recover it from photography. They just can't. So the silver is consumed. There is no above ground silver. Whereas gold, every ounce of gold that's been minted from the day one is still around. It can be in churches and walls or in homes, whatever it is, it's still here. But silver is not. Silver is consumed, and that's where the problem is. The problem is the demand. The demand for silver is still over a billion. What, 1.1 billion almost? Okay, and if you look at the supply, by the way, we've hit peak silver. We're now starting to come down. Okay, so I would suggest we're about 880 million if you include China and Russia. And I take them out because they never let 1 ounce go. So I think the correct answer to look for is about 700 million ounces that are available. And when you start looking at demand over 1 billion, it shows the demand for silver is still very, very strong. Very strong around the world because its uses are so great, especially for us guys, pharmaceuticals. Okay, it's used in antibacterials. It's used in photovoltaic cells, you name it. It has tremendous use, and the demand shows it. The demand is not coming. The demand is not coming down.
These lower prices are destroying the forward supply from mines as well, and the investability and productivity and profitability of mining operations at anything under $20, never mind even $25 silver, is such that it's baking into the industry cake a supply deficit that'll go on for friggin' years. This is so insane where we are in our current pricing. It's going to, in the long run, create a much more sustainable bull market move.
Yeah. Well, what's happened is that silver is really the byproduct. Okay, 75% of all silver that's produced is really a byproduct of gold.
Sure. Yeah.
Okay, so you don't have any primary mines other than Pan American Silver and a few. And Coeur d'Alene, I mean, they're a primary, and they're the represent the 25%. So that becomes very difficult for them. If silver is just a primary market, seeing silver and their mining costs are now dramatically going up, energy costs. I mean, whereas you can imagine having a downturn, and all of a sudden copper and all these others. So if all of a sudden these mines shut down or not making copper things, of course, automatically gold gold would be lower, and also silver. So mostly silver.
And 25% is still a sizable slice of the industry pies, and that is not profitable for the vast majority of producers. And then you have the global economy laying an egg, and copper going down, et cetera. All that byproduct is also in jeopardy.
That's what I'm saying. Yeah. Anyway, that's what we should all watch for in the next few months. And certainly that field, the debt ceiling. Trump's trying to get his things passed, which he won't be able to. He's going to have real problems with his party. The Republican is divided, and I doubt very much they can just do anything. And then they'll just wake up and say, done.
Maybe the scandals of it all is like Russia is behind everything and all that nonsense will blow up the Democratic Party, and the Republicans fighting each other will blow themselves up.
That's right.
We can dream, can we not?
We can certainly do that. I would certainly. I mean, it's going to be exciting times,
Harvey, you were commenting before the show that you have your eyes on September.
I'm pretty sure. Well, that's the latest. No question, because that's the last of the debt ceiling. The debt ceiling will be the first 2 weeks of September. That's when the $660 billion has been used up. And of course, they're going to have to make, and they just can't. And all of a sudden, the Republicans. Can you imagine some of the Tea Party's going to agree to huge expenditures? There's no way. And also tax cuts? Come on. It's just not going to happen. It's just going to freeze. Everything's going to freeze. And these investment guys writing about this, they just have blinders on. They just don't see it. But just watch for that. You'll see. There's no way there's going to be any agreement whatsoever. And all of a sudden, the United States dollar will tank, gold and silver will sky. And what you're going to see is what you saw the advance in Bitcoin and Ethereum. Okay, both dramatic increases. The huge rises in those will be transferred to the real money, gold and silver, and that's when the fun begins. And that's when you guys are going to be so busy you don't know what you do with yourselves. The phone's going to go off the hook with everybody calling. I got to get my hands on metal. Where can I go? Where can I go?
At that point, it's going to be like, here's your ticket. Get in queue.
Get in line. Get in line. You got millions of people.
Get in line. We'll contact you in a couple months.
That's going to happen. It's going to happen.
At some point. I believe it'll happen at some point. Whether that'll be this September remains to be seen, but I believe it's coming at some point.
I think it's the latest. I actually think that something is going on in July 8th, and I'm going to find out. I'll email you guys. Well, it'll be in my commentary. So as
soon as you do, let us know once you find out, Harvey.
I'd be very happy. If you guys, because I write every night at midnight, I get the preliminary data. Maybe I should give that to you guys as well. I think I'll do that. I find out all the crazy things that goes on in the middle of the night. It gives me. It's funny, because I get it around 11 p.m. at Eastern Standard Time. Okay, so we're 1 hour ahead of you guys. And then I wake up at 7 o'clock to see what happened in Asia, so I don't get too much sleep. But anyway, so I'm basically around the clock, 24 hours, finding out what's going around in the world. But I just concentrate. I just love learning about the physical markets. The physical is where I believe where the action is going to be. Okay, that's when people realize they got to turn their paper assets into real stuff. No longer these paper obligations. They're going to be rushing to the door to turn their paper into real. That's when the fun begins with.
Well, we certainly look forward to the fun beginning, don't we, Eric?
Yeah, and the leverage in paper versus actual physical within the vaults of COMEX and London's LVMA and all that is just so ridiculously over levered that only a tiny change in sentiment amongst the standard Wall Street / financial community worldwide will send prices up so fast that the cartel won't be able to control it. We've already seen little bursts of that. Things like the reaction after the surprise Brexit vote and things like that tell the tale of what happens when you get a burst of interest among broader communities that, for the most part, more often than not, ignore gold. And so, but that'll change.
Oh, yeah. Guaranteed. Guaranteed. It's when the average people around the world loses faith in the dollar. The dollar will lose its faith as the reserve currency of the world. And that I'm pretty sure that's by September, that's certainly going to happen.
And it doesn't necessarily require a total loss of faith. We should note that as well, so people, the diminishment of faith is all that is required for people on an incremental basis to want to hedge their positions in the financial community. Average Wall Street types are looking around saying, gee, the FANG stocks are ridiculous. Valuations are high across the board. What can I buy that's a laggard asset? And gee, the dollar's falling? I'll consider a little bit of gold.
Yeah,
and that thought process is where the mainstream, basically know-nothing money managers who are completely oblivious to even the level of manipulation that goes on will in fact transpire and create a very significant bid for gold and silver that'll be even bigger than what the cartel's able to deal with.
I agree with that.
They're barely able to deal with what's going on right now. I mean, even yesterday when before the FOMC announcement, people were concluding that, the economy is going to be a lot weaker than what the Fed is arguing for, and that, Harvey's comment about them making a policy error is where a lot of people were assuming is in fact our immediate future. The Fed always breaks things. When's the last time the Fed actually did a rate hiking cycle without breaking anything? I sure as heck can't remember.
I'll give you one even better. Give me a time where that the Fed was right in their predictions. The last 7 years.
Well, yeah. I mean, that's a horror story all by itself.
Right. I mean, they haven't got anything.
They don't get anything right.
1913, they predicted if they launched themselves, they could take over our country. That was a pretty good prediction.
Yeah.
You like that, Eric?
Yeah.
We're laughing, but it's sad.
Gallows humor.
Yeah. Well, we'll certainly look forward to Andrew's events in early July, and hopefully it'll materialize, Harvey. Let us know as soon as you hear anything.
As soon as I publish it, and I'm certainly working with Andrew on this, so I'll let you guys know but I'm pretty sure that's Andrew is a very cool guy. Okay, and he doesn't get excited. I get excited. Andrew gets his cool, and he realized something big is going on. And remember, he represents Fern. He senses that Sovereign is going to be taking on the banks. I'm pretty sure that's what he's getting at. So I'll find out. So I'll let you guys.